Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's rebound holds for 2 consecutive days following softer than expected US inflation, which reduced pressure on the Federal Reserve to raise interest rates. Headline CPI fell to 0.4% in June versus expectations of 0.1% decline, while core CPI was unchanged, below forecasts of 0.3% increase, weakening the US dollar back to around 100.50. Meanwhile, the update on the US producer prices, or the PPI, provided further evidence that inflation is cooling, though the modest lift in core PPI suggests underlying price pressures have yet to subside fully. In his second testimony, Fed Chair Kevin Walsh described the latest inflation reports as encouraging, but reiterated the Fed's commitment to restoring price stability, stressed that policymakers remain focused on the broader inflation trend rather than a single data point. Turning to the technicals, though, the RSI has buckled since hitting the 70 cent, and it is a key point. Unless we get a break above 70.15, then the focus may see another price pullback and therefore look towards the bottom side of 69 cents. Above 70.15, well, the cap is around 71. Looking at euro, the market is a little bit to the upside over the last 2 days in terms of demand, and we can see the RSI and the MACD have married up and improving, though there is still a lot more work to be seen. That is, a break above the level of 115, figure 15, would give a rally onto the region of 116.35 as a measured move target. Failing this, well, the focus may shift back towards 114 and the base seen around 113.40.50 and reassess from there if we do see a revisit. Looking at dollar yen, well, the market is buckling into the third consecutive day as traders still feel a little bit unsure above 162, and with the cap seen around 162.60.85. Unless we get a break there to support a further bullish case, the technicals are breaking down. The MACD is still very heavy and the RSI. That, for me, supports a move to 161.80, where a break could open way back to 160 as a potential target. A very impressive rally when it comes to sterling of more than 100 pips as softer US inflation data encouraged investors to scale back expectations for further Federal Reserve tightening. Along with that, the momentum gained after Bank of England governor indicated that policymakers remain confident inflation is moving in the right direction, while making it clear the bank will continue to take a measured approach before considering further policy changes. Together, these developments strengthened demand for the pound and extended the rally, as we can see, through that key level of 134.60 and now heading towards a potential target of around 135.70.75 to 136.20 and reassess. The only thing that I will take from this rally is there was a bit of divergence when it comes to the RSI. That means we've got a higher RSI to the rally, but the previous rally of the market, the RSI is not supporting. But the MACD is. So let's see how we play into the coming session. Finishing up with commodities, we are still holding underneath this key level, seen somewhere around 4,075 to 90. Now, if we get a break there, I'm looking for a 250-point rally. And if so, it would be bullish, but the technicals aren't supporting that. They are breaking down. So we still might see this pull back to the bottom side of the range, seen somewhere around 3,960 to 70 reassess. Oil still holding towards a potential rally of 81 as a target, and any pullback likely to find support around 75.5 to around 77. Overall, though, the market is a little bit tight, so we could see this pullback first and then maybe a rally through 81 up to 85. But let's see how the pullback initiates first. If not, then the bulls will return. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the day.